what's going on in this chat. We have 52 participants. All right, big up everybody for joining this webinar. Zimo again get started now. So what I want to talk about is the misconceptions of trading and how to properly approach the market. Right? Everybody can hear me? Just drop a yes in the comments if you can hear me. So the misconceptions of trading, right? So along with technology and social media and all of that, we get painted a certain picture about trading where it's not really right. It's kind of false. This flamboyant, lavish lifestyle say, yo, from you jump in a forex trading, you just give me bag of money overnight and them little thing there. Guys, it's a process. It don't work like that. Zin, it does not work like that at all. So the typical path is like, yo, you learn about trading, you see how one mentor upon Instagram and you go join them and feel say, yo, you're going to get the quality knowledge and you just going to explode overnight and be a top trader. Zin, I can personally tell you say, yeah, no so you go. I've done so many forex courses, like so many, and a lot of them lack the knowledge of what trading actually is. So it brings us to the first question of this webinar. I want to answer that in the chat. Who moves the forex market? What moves the price in forex? Oh, look on the answer them and roll out. Big banks. Liquidity providers, hedge funds, banks, the economy. Banks. Yes. Banks move the price like banks, yo. So, scammers. Yeah. I don't know if you want to see this article. I'm showing an article. Eurobank fines. Alright. It came out in the Jamaica Gleaner too. I'm gonna want this one. I want CNBC. You see them bank here? See these banks? Barclays, Citigroup, JP Morgan. Among banks find, you see these banks? These are the largest players in the forex market. Zine? Yeah, man. Trump changed that for them. They make this daily. These are the largest players in the forex market. Right? If you can't beat them, you have to join them. Period. If you're not trading like a bank in the forex market, you're not going to make the capital that you actually want to make. You're not going to have the returns that you want to make. Zine? And as a retail trader, the banks subconsciously program us and paint setups in the market to take away money from us. Right? Copy? Put a thumbs up in the chat if you not copy. Or put like yes or something like that. Alright, yeah. People copy. You see me? Alright? So it brings us to the second part, the second question in this webinar. Alright? Expound some more. Wait. Alright. Swain's iPhone. Swain, you using a phone? You're on this webinar with a phone? You can see my screen? I'm talking to... Alright, you can see my screen. Yes or no? Alright, you can see my screen. What? Alright, let me unmute you. Again to allow you to ask what you want. SW. Alright, Swain, talk. What you don't understand? Swain. Oh, everything up about the banks. Alright. You can talk, you know, I'll unmute you.
Oh, you can hear me?
Yeah, I can hear you.
Okay, the part that you were saying about the bank being in control and manipulating, right? And at the place setups.
Yeah.
Is that when just trading off of using them?
Oh, alright, let me show you what I mean. I'll give you a good example. So, let me draw one. A typical one that you'll find a lot. Or actually, there's even one right here. Everybody know what a head and shoulders is?
Mm-hmm.
Alright, so for those who don't know what a head and shoulder is, I think I just talked about head and shoulders a while ago. On GBP AUD. This is a head and shoulders, right? So you have a left shoulder, a head, and a right shoulder. And it's a general rule of thumb that when price breaks the level of support within the head and shoulder, it will retest it as a resistance and price will fall, right? That's the general rule of a head and shoulders, right? So we see it play out perfect right here, so. Right? Now, if we look on Euro US dollar, we have a head and shoulders also. We have a head and shoulders right here. So it doesn't look as pretty and as clean as the other one, but let me draw it out. We have a left shoulder, a head, and a right shoulder. Right? You can see that? Yeah. Our head and shoulders right there. So now the general way people going to view this head and shoulders is that it's going to continue going up, right? People would be buying along here, so because in order for the right shoulder to be complete, it has to go up, it has to come back down to right here, so which is this level of resistance acting as support, and then it pushed to the upside, right? But look what happened instead.
It was manipulated.
It was manipulated, and the market just fell. We're not gonna really call it manipulation per se, because the technicals is correct. If you're looking at the market from a very technical standpoint, a correct technical standpoint, you would see that the market would want to push down from here, so. But a lot of people don't look at the market the way how a lot of more experienced traders and institutional traders see it. So they're just going to see a pattern, and then they're going to go with the pattern because, as I said, people see a head and shoulders, they go on to buy at the end of the right shoulder. Right? So that is one way how the man them manipulate the market. They paint pictures for you. Alright, let me show you another one. Like obvious trades are normally manipulated. So like on USD CAD, on United States dollar CAD, this was the level of support that people were looking to buy from. This level and this level. Two levels of support people could buy from. And you can see just by the composition of the candles on a lower time frame, you can see that people were trying to buy along right here. See the market came down, I came up. This was people trying to buy. The market came back down here and came up. This is people over here trying to buy. But then the market started a little buy and then just dropped down 35 pips. What that does is it takes out everybody's sells. It takes out everybody's stop losses. And then the market just go up in the direction that you wanted it to go. Right? Stop loss hunting mental. Same thing. Like stop loss hunting is a real thing in the market. And as a trader from an institutional standpoint, they like low risk to high reward. So they're not going to be over here sitting and waiting for the trade like how a normal retail trader would, because they know that in order for banks to place their orders, they have to take out all the pending orders in the order book. Follow? Alright, so I'm going to mute you back here now. So I have another question for everybody. Do you know what an order book is? Yes or no? Wow. That's a lot of no's. Alright. So an order book. Alright. So you don't know what order book is. Good, we're going to answer that. Another question. A book or B book in broker. Oh, order book. Right? Another question. Us as retail traders, when we execute a trade, if we execute a buy, Do you know that someone has to be selling in order for us to buy, and someone has to be willing to buy in order for us to sell? You know that, right? Okay, we've seen some yeses. We've seen yeses, and yeah, everybody is basically saying yes. I saw a couple no's. All right. In order for you to buy, someone has to be willing to sell, and in order for you to sell, somebody has to be willing to buy. Like, write that down. That is a golden principle as it relates to trading from an institutional perspective, right? Now, when we're trading like anywhere between a $10 account up to a 200,000 US dollar account, right? That is monkey money compared to what banks are trading. Agreed? I'm not saying a yes. Okay, see, some yeses are for you. Yeah, monkey money we are trading. We're like the money that we are trading when banks trading, that them they would never execute a trade of those small levels, right? And also leverage. Everybody know what leverage is? Okay, I see a couple no's coming in. Leverage is basically your money being multiplied by the broker, right? So if you have $1 at 1 to 100 leverage, you only have $1 in your account, but you have the buying power of 100 US dollars from the broker's perspective. Simple? All right. That's leverage. Please repeat. Jessica Prescott, what do you want me to repeat? Leverage? Oh, leverage is alright. Leverage is basically a multiplying factor for your money. It is a financial asset offered by brokers, right? So if you have $1 in your trading account and you have 1 to 100 leverage, in your account you only have $1, but to carry out the trade you basically have $100, right? So all right, let me do some quick maths right here. So phone hide. So this is what really happens on the inside of a broker. So a 0.01 equals 10,000 US. A 0.10, which is a standard lot, equals 100,000 US. $10 lots. Oh no, let's not go there. 0.10, this is incorrect. 0.10 equals 10,000 US standard lots, and all right. So when you enter a 0.10, if you're trading, basically what it is doing is, if you're buying, it is going to buy 1,000 US dollars of, all right, let's use US dollar, Canadian dollar for example. If you are buying Canadian dollar, you're buying 1,000 US dollars worth of Canadian dollar at, for instance, hold on, let me draw an arrow, at, for instance, this price. You bought 1,000 US dollars worth of Canadian dollars at 1.34300, right? When you close your order at 1.34600, the difference between the value of the 1,000 Canadian dollars to US dollar right here and right here is your profit. Copy? Simple? Or anyone may explain that more detail? More detail. All right, yeah, more detail. I go far enough. So more detail, and more detail again. I can give you a really detailed example. So we're going to go on Euro US dollar. All right, we're going to find a nice little price, some whole numbers. All right, so a perfect whole number right here. So 1.1111. right? Right here, so. And then we're going to use 1.12. Yeah. We have to follow the objectives for real. Have to follow them for real. But it's good for you to know some of this, because like it's going to tie into the information I'm going to give you as to how the banks them place their orders and how you can piggyback their orders to be profitable. So if you place a point 0 if you place a point 10 right here, so right, that means on your MT4 you just say a 0.10, but what you actually did is bought 10,000 US dollars worth of euros at this price, right? So you bought 10,000 US dollars worth of euro at 1.1110, right? That's what he did. And then the price then moves from 1.111 to right? So your 0.10 at 1.111, when it moved from that price to 10,000 US dollars at 1.1400, basically, do this conversion real quick. It's simple and easy. 10,000 US dollars divided by 1.1100, right? Write down your answer, and then again write 10,000 US dollars divided by 1.1400, and just subtract the two figures, and that's the difference in profit. Simple. And as Mr. Harvey said, we have to continue, because if we talk about fundamentals, we're going there the whole day. Alright, so the last question I asked you, can somebody remind me, because it kind of gets sidetracked? What's the last question I did ask? Leverage. Alright, yeah, leverage. That's what we got here. So we all need to understand that banks don't trade with leverage. When a bank places a trade, if it goes the opposite direction, they are losing money, a lot of money. Order book and leverage, thank you. Right? So can somebody give me a figure of what a bank trade would look like? Like, tell me a number of a US dollar figure of how a bank trade would look. Like, just give me a random figure. 5 million, that's very small. 40 billion, yeah, that's what we are talking about. The number here look big. Whoa, yeah, 40 billion. That's how banks trade, right? I don't know, say every big bank out there, friend, right? Like, all big banks are friends. Them know each other. Them are best friend. Them sit down and eat dinner together at night time, right? I don't know that. Alright, everybody, just like we, yeah, lavish. See me? So if you have a friend and I don't want to make some money and I get up and say, hey, we're going to sell $10 billion worth of Euro USD, I want you to do the same, because if you don't do the same, if you do the opposite of what I'm going to do, I'm going to lose money. And the best way for everybody to make money is everybody sell one time, right? Just like politicians. Well, yeah, you can use the same analogy there. Everybody have to do this, yes, bank cartels, which is why the whole of them get fined a little $1.2 billion the other day. All of them bank here are friend, especially this bank. JP Morgan Chase is the largest player in the Forex institution. Largest player. So anything them do, Citigroup and Barclays, HSBC, Bank of America, Wells Fargo, all them other huge banks are going to follow exactly what JP Morgan does. Right? So if JP Morgan decides that they're going to sell $35 billion, other banks are going to try to sell as much as what they have also, because if they don't sell, they will be losing money, right? So let's use one nice little whole number figure right here. So remember this concept. You have to have buyers to have sellers. You cannot buy if nobody is willing to sell, and you cannot sell if no one is willing to buy. First concept, if you remember. Second concept, if you remember, banks don't use leverage when they're trading. Copy? Let me see some copy in the chat, please. I don't feel like me I talk to myself. Yeah. Copy. See me. So let's use Euro US dollar for example. And let's use this level right here, so. Right? So you see at this level right here, so, we're going to use example called Bank A. Wants to sell 20 billion, right? This is something called a pending order, right? You see how we just go into the market and click buy and click sell? Banks cannot do that. Banks have to use orders, right? And the orders flow in something called an order book, right? I'm gonna show you now what an order book look like. Alright, this is an example of what an order book look like. I'm gonna find a better example. Forex. Perfect. I'm gonna get a bigger one. Alright. Perfect. You can see this, right? Copy. Alright. It's going to show you where people are willing to sell. And it's going to show you where people are willing to buy. And it's going to show you the open orders and the open position. Do you know what's the difference between a position and an order? Yeah or no? Alright. So an order is when an order is pending, right? You have 6 types of pending orders. Anybody know them? The 6 types of pending orders are buy limit, sell limit, buy stops, sell stops. That's 4. Can anybody tell me the last 2? Anybody know the last 2? Market X, please remit. Sell stop limit, no. Buy sell. Alright, last 2 pending orders in the market are stop loss and take profit. Copy? Alright. So, we as retail traders, we seriously, what do you mean by seriously? Expound panda seriously then. Oh, you never know? Yeah. Your buy limit, your stop loss and your take profit is an order. Now, we as retail traders, we don't have access to the order book, right? We cannot see what people are willing to buy and sell. The only order book we have access to is this is the only order book we have access to as a retail trader. It's called the Wanda order book. It's a 24-hour summary of what their market closed. So you're not go, it's here. Alright. This is the information we have access to as it relates to order book. Right? It's going to tell us the pair, it's going to tell us the orders, and it's going to tell us the positions. Right? So if we look on Euro USD right now, you're going to see a lot of sell orders are accumulated at the 1.40 region. So if we go over on the chart and we look at the 1.40 region. Oh, hold on. Let me try something really quick. it's at 1.14, sorry. If we look at the 1.14 region, which is up here, so all the way up here, so this line right here, you have a lot of orders sitting, waiting right here. So I heard person saying their entry is where their TPRSL is. Yeah, definitely. We're going to get into that too. You see me? So we can look on the order book and see where orders is, right? Get that concept in the head. The banks can literally see where we place our orders. Them can know exactly where our orders are. So again, go back to Bank A wants to sell $20 billion. So when Bank A placed this order, every other bank knows that Bank A is willing to sell $20 billion right there. So what that means in the market is that any other bank which is not willing to sell is going to be losing money. The value of the money that they hold is going to be losing. They're going to be losing value of that money. So Bank A sell off at $20 billion, right? You see when Bank A does that and the market push go down here, so you see the next time the market come back to this level, Bank B Bank B, oh, alright, band BANK. C. Every other bank I go willing for sell off right here, so because Bank A don't sell, right? So if them get back to this price, basically what they're doing is called cutting them losses. Because the value of the money at this price is less than the value of money of this price. So any opportunity them get to sell off what they have, they're going to take it. Right? That's how banks trade. They trade off of pending orders. Now, pending orders are always in certain areas within the market. Everybody know what support and resistance is, right? Yay or nay? Alright, everybody know what support. Nay. Somebody said nay. No. Oh, we have some new people over here. Alright. So a quick example. Support is like a floor and resistance is like a roof. Right? Simple. Floors and roof. So banks always have pending orders sitting at floors. So this is a floor right here. And this is a roof. Copy. Let's change this to blue. Change this to red. Set. Right? Yeah, nice way to put it. Baby pips, floor and roof. Throw a ball, for example. Alright. Yeah, throw a ball. It bounce. Price will bounce off of a floor and bounce off a roof. Look simpler? Zoom in. Floors and roofs. Right? So bank B, C, D, E, F, and G don't sell off their money, right? So you see the market continue push back down, right? Back to the concept that we make earlier. In order for you to have buyers, you have to have sellers, and in order for you to have sellers, you have to have buyers. If Bank A sell off $20 billion right here, so call it say the rest of the banks B to G sold $20 billion again, there's not enough people willing to buy the orders that they are selling, right? Like, it's a hard concept to grasp, but if people are willing to sell right here, if you have $10 billion being sold right here and only $8 billion worth of buyers, that means you're only going to have $2 billion left. And they cannot have an excess on the order. They're going to make sure them sell off everything one time. Right? So who said that? Bank HIJK LMNOP next. Yeah, you see me? So you see over here, so when Bank HIJK LMNOP come over here, so there are not enough sellers right here, so right? Them know there's not, sorry, my apologies. There are not enough buyers right here, so So what the banks them do? I want everybody Google this on them free time. Something called high frequency trading. Oh my gosh. Anybody know what high frequency trading is? Okay. Alright. High frequency trading is basically algorithms that trade Forex for you. Right? And what these algorithms do is they can be programmed to paint certain pictures in the market. Like the bank know say them not gonna have enough sellers or enough buyers to accept them orders. So what they do is they program it into the market. Them just program an algorithm, and that algorithm literally paints all of these candles. So you see everything that happened in the market, fake outs, perfect. Everything that happened in the market is predetermined long weeks ahead by these banks. Weeks. Fundamental news releases. Yeah, I'm gonna tell you this. The bank them know the fundamentals before the fundamentals come out. Bank and politician are friends. See me? So what these algorithms do is that they paint a picture for you. So let me show you a picture right here. So see a picture right here. So I'm gonna clear off these charts. Well, I'm gonna clear off some other things that are not really needed. Get rid of this line. Get rid of this line. Get rid of this line. And get rid of this line. Alright, so for those who are traders, let's take this trade together. As a Forex trader, if we break a level of resistance, right? We broke this level of resistance right here. Let me highlight this entire area. We broke this level of resistance. Right here, so. See this level of resistance? We'll break it. That resistance now turns to what? A level of what? Support, right? See the support them rolling in. Alright. Everybody here so know say I hate Fibonacci, right? Because Fibonacci is a tool that the banks them use to manipulate with. So look at this right now. We take our Fibonacci from right here, so. I will go to right here, so. We'll take it from our point A to our point B. And what we see right here? Why did it just come up? Alright. So we see we'll have a 50% retrace right here, so right? Naturally. You see me? The principle of Fibonacci is that on a retracement of certain price retracement zones, you can buy to get an expansion. So this is what we're expecting to happen with Fibonacci. We expect price to go right here, so pull back to right here, so hold on 1 second. We expect price to pull back to right here, so, and then push to up here, so either negative 27 or negative 61.8. That's how Fibonacci work. If we know say that's how Fibonacci work, then clearly the bank know that's how Fibonacci work, right? Copy? All right. Remember the principle. In order for you to have sellers, you have to have buyers, and in order you to have buyers, you have to have sellers, right? So look at this right here. These high frequency trading algorithms programmed this level of resistance right here, so, right? They programmed this big spike where you see right here. You see how crazy this spike is? Look how big this one candle is just come up right here, so. I highlight it so everybody can see it. We see that candle how it just strong, it just break the level of resistance, right? Then program that into the market. So when this price break this level of resistance and come back down to right here, what are we as retail traders going to do? We see a broken level of support turn resistance, and we see nice Fibonacci retracements. What are we going to do? I want everybody comment what they would do. What you say? And I go do what? Buy. You see everybody will say buy? Don't feel no way, but on a fall trap to the bank. Because what? In order for you to have sellers, what do we need? Tell me what you need in the comments. You need what? What we need? We need buyers. You see me? So what the banks them get what them want, don't? The bank them get exactly what them want. Exactly what they wanted. So them program us as retail traders to take that buy, because in order for them to sell, they need us to be buying their sell order. Make sense? Wanna tell me if it makes sense? All right. Yeah, it takes a minute to process. Makes sense. All right. So how we go around this? How we protect ourselves as a trader? How we go through trading and actually can wonder and see how to make money? All right. All the Jamaicans them in here so supposed to, or it's not even Jamaicans alone. People all over the world supposed to know that saying here, right? And I want to type the answer in the comments for me. If you cannot beat them, what we going to do? If we can't beat them, we are going to join them. Perfect. Right? Hold on, I just posting on something on IG. Lit over here. You see me? If we can't beat them, we have to go join them. How do we join them? Before I can tell you how we join them, we need to know certain little things. We need to know certain little things about Forex. So I'm going to be teaching a little. So I can draw for a little book and draw right down what I say. You see me? So Forex. Like, this is going to be the quickest crash course in Forex. I'm probably going to teach you Forex in like 10 minutes. Not being cocky and all, but Forex from my perspective is very easy if you learn it correctly. And a lot of the problems that I faced and some of my students face and a lot of traders today face is that they did not learn Forex correctly. They learn along the lines of you have to know more to be a better trader, but really and truly, you don't need to know more. Exactly, patterns. You see these patterns, patterns are one of the major ways the bank them use for take our money. Cause them just paint a nice little pattern and then boom, our money gone. You see me? So the 3 things you need to know about Forex are structure, right? All markets have a structure. Is either them going up or them going down, right? Structure, first thing, right? Second thing we need to know. Hold on, give me 1 quick second. 1 quick second. Hey boy Shannon, stop message me and say I disturb my group. Oops, my bad. Big up yourself, Shannon. Alright, first thing is structure, right? Second thing is I don't want nobody laugh after me because I can't say the word thing properly. You see me? Oh, hold on. Patterns are consolidating. Oh yeah. So you have three parts of structure. You have right here, so. Oh, this is a bright color. I don't like this color. This color is very offensive to me. We're going to use clean zones. We have uptrend. We have uptrend, right? Can anybody tell me what uptrend is? Like uptrend is what's uptrend? Buys. When the market is going up, we want to do what? Higher highs and higher lows. Yeah, perfect. When it's a buy, good. And then what is this right here, so? What a part here right here, so? This part. Tell me what this part is. Consolidation or sideways movement. Perfect. So we're just going to call it sideways movement. See? So we have uptrend, sideways movement or consolidation. I was right here, so. Downtrend, perfect. So in an uptrend, what we're looking to do? We're looking to buy in uptrends. In consolidation or sideways movement, what we're looking to do? Stay out, wait, stay out. Let me see what I go say. Let me see, cause I have an answer for no, and it's not the answer I'm getting in the comments, you know. Buy, again, buy and give us a minute. Alright. Check order book. We can't really check the order book because we don't have access to that. Close the laptop, sell at resistance. Alright, let me show you some consolidation over here. So we're going to come back to right here. So UCAD, let's turn on this chart. Alright, let's talk about consolidation. We have a level of resistance right here, so, and we'll have a level of support right here. So hold on, let me adjust this. Alright, so what we're going to do right here, so up top right here, so what we're going to do, we're going to sell, right? And what we're going to do down here, so we're going to buy. That's why you trade consolidation. The rule to trading consolidation is first you have to establish a zone, right? So you have to establish the parameters of the consolidation box that you're trading. So this consolidation box is all along right here. So we want to buy at, we want to sell at resistance and want to buy at support. Buy low, sell high. One of the golden rules of Forex trading. Buy low and sell high. Zooming. So back over to Euro USD when we're explaining the basic principles of Forex. So we have uptrend, we're buying uptrend, sideways movements, and downtrend, selling downtrends. So that is one principle of Forex. The next principle of Forex is support and resistance, right? Wait, you have to watch for the fake outs. Alright, let me check the comments for if anybody asks any questions on wait for breakout then retest. Alright, Shamika, you see this break and break, wait for a breakout then retest, perfect. But you have to be careful on the retest because like another picture the banks then will paint is they will paint a perfect retest for you and then it just fall out of the sky or shoot up into the sky. If alright, let's say for a sell, you're in a consolidation box and it break the support and retesting the support as resistance. A lot of people are going to sell and then it just go the opposite way. I can show you a perfect example on GBP, JPY, but I want to finish this right here what I talk about. So scroll down by I have seen that before. You seen the fake outs before? Everybody here see a fake out before, right? Yeah. Alright, so we'll have uptrends, sideways movement, downtrends, support, and resistance. Oh, whoopsie. I put it in. Oh my gosh, I'm a disaster today. Support, and then we're going to have this as resistance. Right? Support, resistance, uptrend, sideways movements, and downtrend. What is question? Do you always enter on a retest? It depends. Honestly, it depends. And one of the main factor is the time frame that it happened on. All right, so check this. I want you to write this down. The higher the time frame, it is the harder the banks. All right, let me get this correct. The higher the time frame, the harder it is for banks to manipulate it. It is very easy for the 1 minute, 5 minute, 15 minute, half an hour, 1 hour, and H4 to be manipulated. But you see the daily, weekly, and monthly are very hard to manipulate. In fact, those are the best time frames. Daily, weekly, monthly, best. Higher the time frame, the less noise. Shima, perfect. Higher time frames, less noise. Me personally, the H4 and the daily are the 2 time frames that tech trades offer. In addition with low time frame transitions and all of that. Right? So we have support, resistance, uptrend, sideways movement, and downtrend. Now, I said there are 3 main things that we need to know. So we have 2 right here. The third main thing that you need to know as it relates to trading is a transition within structure, right? So remember, uptrend, downtrend. Those are 2 forms of structure, right? How do we see a transition from uptrend to downtrend? Anybody know what that is? Anybody follow? BOS, HHHL, break of structure. Alright, perfect. A break of structure. So a break of structure looks like this. Turn on this. I'll use some colors. I'll change this to blue. Alright, follow? We had an uptrend right here, and then the market stopped going up and started going down. I would say indication as a key level or a zone. Alright, so we had an uptrend and we had a break of structure, and now we have a downtrend. Let's put this line as black. Boom. Oh, it didn't change. Take off this. My laptop is moving so slow. Alright, these are the only 3 things you need in trading. You don't need nothing else. Oh, and another thing is called candlestick analysis, but I can't go over that with a day of about 2 days. You see me? Hold on. I'm sure the dog never say. Man's out here giving away information that costs $7.50 us for free. Yeah. Like, trust me, yo, people charge crazy amount of money for them simple little something here. Crazy. I was just reading out of a group chat with my students. Alright? So, this is what you call a breakout structure. So, 3 things: support, resistance, sideways movement, and breakout structure. Candlestick analysis. Right? Can read the Candlestick Bible. Yeah, if you need to know about candlestick analysis, just read the Candlestick Bible. It's a book, just Google it. You can find it. Everything there online. You see me? These are the only 3 things you need to know about trading. You don't need to know about no indicators, no moving averages, no Fibonacci, no nothing else. Just support, resistance, uptrend, sideways movement, downtrend, and transitions within structure. Nothing else you don't need to know about trading. So, what the defining factor about the information that I just hit me up if you need it on air. Big ups. Thank you for providing that book, Shamika. Big ups for that. You don't need Bolingo bands. Hey, Craig Mill, block you. This is all you need. You see me? You don't need nothing else. As I was saying earlier, the defining factor about the information that you know, and the only information you need is where you apply it within the market. Right? So, every trade that I do comes from this. This and this alone. Nothing else you don't need. So let me give you a quick example. Let's go over on any pair, it don't matter. GBPR. See a nice one here. USDCHF. Just need a few lines on my charts. Yeah. Ooh, lines everywhere. Alright. Every trade is going to come from the same information I just gave you a while ago. I'm on the wrong pair. USD CHF. See it here. Go down to 4. Every trade is going to come from the same information I just gave you a while ago. So, let's start. Let's use the replay tool. You see me? Let's start from over here. So this is all the information we have. According to candlestick analysis, we identify a level of resistance right here. Right? So we'll map this off as resistance. What is resistance? Resistance is a what? Start with R. Roof. You see me? Alright, so where's our level of support? Right here or right here, so? Isn't this level of support? Yay or nay? Yay, alright. So this is our level of support. Right? So we'll have our roof and we'll have our floor. Let me change this to blue for now real quick. I'm kind of colorblind, you know, so I don't want to laugh off of my blue. Some people tell me I'm not blue, but to me that's blue. You see me? Alright. So we have our resistance and we have our support. So let's press play. Alright, before we press play, let's go back to over here. So I want to copy everything I did draw. Where did I draw it? Okay, I drew it right here. So and copy all of this. Copy. Come over. That's all. Paste. Right? Alright. I just want them on this page. So let's go back to our replay and go back to right here. So we have our level of resistance and we have our level of support. If we want to take a sell or if we want to take a buy, where is the best area in the market to do so? If we want to buy, where's the best place to buy from? Yeah, we want to buy from supports. If we're not, yeah, we want to buy from the floor because it's less risk. We'll get less risk associated with it. Right? So we want to buy off of the floor. And if we want to sell, where we sell from? Alright, sell from roof. See me? So moving along. See the market doing its thing. Just going up and down. Let's speed this up so it don't take too long. We could have taken a buy right here, so. Because what? The market came back to the level of support. It came back to the floor. And I agree that's a nice buy. We could have taken this buy right here, so. No. Yes. No. Yes. Maybe so. Alright, let's see what happened. What has happened there, so? Notice what happened? Fake out. Perfectly. Fake out. Fake out just happened. But take note of where the market fake out to. This is what you call a stop hunt. Right? It's called a stop hunt. The market is looking for your stop losses. You notice where it got to the next level of support. Alright. I'm glad everybody kind of seeing how the market play out. You see, the obvious moves are the moves that the banks want us to take. Them want we take them. Bank them just take for money. Because in order for the banks to sell up here, so they need who to buy. Them need we for buy them sell orders. You see me? You have to start think like them. You have to start move like how them move. You see me? So let's continue. So you have something in the market called dumb money and smart money. Don't take offense because over time you grow and learn and experience as a trader. You start to think like the bank and you start to trade like smart money. The dumb money is the money in the market that sees every simple trade and tries to capitalize on it. Because from a risk to reward standpoint, you're only gaining 39 pips, but you're risking 38 pips because 38 pips to the south is the next level of support, right? So you got caught in this. Anybody that placed the order right here, due to the what you call it, the mainstream way of how trading is done, the mainstream way of how trading is done is that you have a what you call it, a 30 pip stop loss. Tell me if you ever hear about that term before. Like if you watch a one random YouTube video or a trading mentor say, hey, you should have a 30 pip stop loss. And I agree. Like that is, yeah, 30 to 35. You see me? It's probably a range. You see me? Even I use it because it's a standard, but what and where and how you use it is different. Say, yeah, perfect. This risk to reward is horrible. I'm telling you something. Banks love low risk and high reward. Banks love low risk and high reward. Jot that down, right? So this would have been a horrible trade, but let's continue. Let's press play. Okay, carry the speed down a little. See me? By the way, anybody wondering what this tool is, it's called Replay. It's on TradingView. Just click it right here. So you have to buy TradingView though. You click it right here and it just replays the market over for you step by step. It's a powerful tool when it comes to backtesting. Alright. So asking a question now. This was a level of support, right? This level of support was broken, right? Yes or no? So this level of support is broken. Past support becomes future what? Past support becomes future resistance. What do we do at resistance? We do what? We sell at resistance, right? Alright. So the bank wants us to sell. Look what the bank do. Oh, oopsie. My bad. Let's carry this back to right here, so. Alright, press play. sorry. Alright. Yeah, so look what the banks do. We wanted to sell right here, so. Right? If you place a sell along anywhere right here, whether it be at this level of support acting as resistance or this level of non-resistance right here, so. If we place a sell right here, so, a majority of the orders are going to look like this. You're going to have an entry right here, so. You're going to have a 30 pip stop loss right here, so. And then you're going to be looking for the market to do something of this sort. We're going to take our Fibonacci, because in order for us to be able to beat the banks, we have to look at what the banks think us retail traders are going to do, right? So this is what the banks program into our mind. This is the trade the bank then program into our mind, because we have an uptrend, we have a break of structure right here, so we're going to start a downtrend. A downtrend, everybody going to want to sell, right? So this is the trade the bank then want us to do. Let's press play. Oh shoot, I did it again. You know when you're watching a video on YouTube and you want to pause the video and you press enter to pause the video? You see me? That's what I keep on doing. But alright, this is where we're at. This is exactly where we're at. Alright, so we're going to press play and pause. Play and pause. Alright. Look at the figure we use. Look where we take the trade first of all. We took the trade right here, so. And look where we put our stop losses. Right here, so. Look what the banks do. Wanna see that? What just happened to us again? It started with fake. Stop loss hit. What just happened to us again? We get what? We got faked out. Stop loss hunt again. So we get 2 stop loss hunts so far. We get 1 stop loss hunt right here, so. I will get another stop loss on top there. So wait. Pause for a second. I don't trade with a stop loss. Is that okay? That's a perfect formula to lose your money. Okay? That is not okay. You should always have a stop loss. Stop loss is what protects your account balance. You don't want to risk all of your account on one trade because anything can happen. If you don't have a stop loss and the market has something called a radical wick or a flash crash, you just basically, after that, you'll owe the broker. Like, all of your money will just be gone. Especially with news. Yeah, perfect. So, we lose one trade right here, so. When we did want to go, so what did we want to do? We did want to buy off a support. Hold on. We wanted to buy off a support. We got stop loss hunted right here, so. I wanted to sell at this past level of support acting as resistance. So get stop loss hunted again right there, so. Right? But the bank sign finish. By the way, and I remember the whole, can you explain about the market gaps that you have been happening since lately? Yeah, I can do that. I can write it down. So when I finish explaining this, I can just answer that question. 1 second, get a pen. Alright, so what is it? Gaps? Explain gaps. Alright, got you. Gaps. Alright, after I finish running through the entire outline that I had for the hey boy Craig, I gotta block you for really now. Explain market flow. Alright, we can touch a little bit on market flow. Just a tiny bit. Alright, so after I finish the entire course outline that I had for this webinar, I definitely gain finish before 4 o'clock. But any questions I have after that, I'm free for ask and I'll give as much knowledge as possible. Liquidity traps. Liquidity traps is in this course, so I'm going to show you now. Can we see your fib layout? Sure, that wouldn't be anything positive, but I can give you it. Fib layout. Alright, so liquidity trap, gaps, and fib layouts. Alright, so let's continue. Where is the breakoff structure? The breakoff structure happened right here. See this level of support right here, so? This is the breakoff structure right here. You use fibs then in all your trades? No, I never use Fibonacci. Look man, I made it. Alright, so let's continue. So we get stopped out of this trade, but we're in a downtrend and we're looking for sales now. Right? Alright, let's pause right here, so. Right? What do we see right here, so? What we see right here, so? Let me get rid of this and this so you have a better picture. Let's get rid of a lot of the... What we see right here, so? Can anybody tell me which pattern this is? Right here, so. M getting closer. Look. Right here, so. Right here, so. And right here, so. Triple top, head and shoulders. Head and shoulders, head and shoulders. Alright. You notice how much different patterns you know say? Somebody said double top. Somebody said M. Somebody said head and shoulders, triple top. Lots of head and shoulders. Nah, use Craig, and I'm not using your Craig. All of this is just patterns. So let's talk about head and shoulders. As I explained earlier, when people say head and shoulders, generally what they do is they want to buy on the retest of the support right here, so. Right? This is what the bank painted a picture for us to see. This is the trade. Oh, 1 second. This is the trade the bank them want us to see. They want us to see a break of structure. They want us to see a head and shoulders. They want us to do something like this. Cause yo, the market is breaking structure. We'll take out our Fibonacci. We're going to look for a Fibonacci retracement at. You notice where this level of support is right here. So right at the 61.8 golden level or whatever them call it. So this is what the bank wants us to do. And the bank wants us to put our stop loss right up here. So at 30 pips. Because like that's the that's what most people do. A 30 pip stop loss. This is what the bank wants us to do. When I agree say this is what the bank wants us to do, cause this kind of look like a good trade. We have a trend line break and we have a head and shoulders, right? It looked like a nice trade. Alright? So let's press play, see what happened. Came to the 38.2 and pushed all the way down. You see this picture that the bank painted right here? It never even got tapped. Never even got tapped. A lot of people had pending orders sitting right along that level. But what the bank do? The bank just neglect it and push to the south side. So what that do now is people try to take a sell right here and then lose their money. Sorry, people try to take a sell right here, so a buy right here, so buy they try to take right here, so and then lose their money. Then they try to take a sell of the past support acting as future resistance and then lose their money. What that do is it make people fed up. It make you frustrated. Over a 2-week period, you just lose bag of trade on one currency pair. You get fed up. You close your laptop and go about your business. Anybody here ever feel fed up after them lose 2 trade well quick? Be honest. Cause me get fed up sometime when I lose trade and lock all my laptop, dash where my computer and them thing there. Yes, revenge trading kick in. Yo, the market is subconsciously programmed to act against us as human beings. The psychology of the market, that's how they program it. So we just lose out on bag of trading. Lose out on bag of trades. You see me? And then when we lose out after a while, the trade go exactly our way. How much people can attest to that? Say, yo, them lose, you want to take a sell, and like you lose the sell 2 times, 3 times, and you go about your business, and you come back, and it just go exactly to where you wanted it to go. Agree with me if I saw it go. Yes, like the man them know, they program it into the market. You feel like a madman after you say, why this happened? How me allow this to happen? See me? So that is just a little example of how the bank them trick us and take our money. Lose 2, close out early on the 3rd one and market drop. Yeah, like them things that always happen countless amount of times. And to be honest, the only way you can really the market no rate high. You know how much time I said that? The only way you can really go around all of this is to try to adjust how you see the market. Because if you're going to see the market one way all the time, then clearly what's going to happen to you is failure. Like pure failure. That's all that's going to happen. So a lot of people do see this, but let me show you something. If you look right here, so a lot of amateur traders trade specifically head and shoulders patterns. Did anybody see this? Let me adjust this a bit. Anybody did see this? Can I agree that's a head and shoulders? Yes or no? It's a head and shoulders. So you see along right here, so you know the reason why this candle went up here, so the reason why this candle went all the way up here is because people were buying all along right here, so but the banks were selling. You were buying the bank's orders. Anybody that traded this off of this head and shoulder principles were accepting the buys, accepting the sell orders from the banks by buying. See? You can't get trapped out like that. Alright, so moving along. Where am I in my course for this? So we talk about how the banks then manipulate us. How we talk about basic technicals, support, resistance, uptrend, sideways movement, downtrend. And we talk about consolidation, sideways movement. And we talk about breakout structure. Now, we talk about the concept that the banks need us to buy their sell orders and needs us to sell their buy orders. The concept of buyers and sellers. Now we're going to talk about liquidity. Anybody know what liquidity is? Yeah or nay? Yes or no? Let me see it in the comments. Feel like me I talk to myself. Alright, I see one person, 2 people know what liquidity is. Unsure, nah. There are 63 people on this webinar. I need to see more answers. I feel like the same people that might answer over and over. Come on, I'm going to see the answers. Who know what liquidity is? Can you show proper entries? Alright, I'm going to break down a trade that I did for this week. I'm going to break down a trade I did. Everything, the whole thought process of a trade I did. I'm going to do that when I finish the course, the little objectives I have for this webinar. Alright, so trade breakdown. And during the trade breakdown that I'm going to do at the end of this class, course, whatever, I'm not going to hold back any knowledge. I'm just going to say it exactly as how I see it in the market. So all who want to record it and reverse engineer it, do you. I believe knowledge should be free. This is a multi-trillion-dollar market, yo. Knowledge, you can't be selfish with knowledge. You see me? So trade breakdown added to the list. But back to liquidity. Anybody know what liquidity is? Anybody will say yes and I have got answer. So I got gain on the mic and I have got answer. Right? So who know what liquidity is? I don't see anybody say them know what liquidity is anymore. One brave soldier step forward and tell us what liquidity is. Volume. It has to do something with volume. It has to do something with volume in the market. You're close. What the brave soldiers them there, what did I say? I have to come pick one or no? Where did say yes earlier? The amount of people in the market, kinda on that point. The amount of buyers and sellers, close. We're getting there. Anybody else want to get a shot? Take profits. Lol, need to make moves that attract buyers and sellers. Large buying and selling pressure. It's basically cash flow. Liquidity is the amount of volatility in the market. Alright, we're getting close. Our money sitting around. Yes, perfect. Our money sitting around. That is what liquidity is. That's a simple way of saying it. Our money sitting around. So let me show you some liquidity. On Euro USD, Euro US dollar, this is liquidity. Right here, so. This entire area right here is liquidity within the market. Now, how I look at liquidity is liquidity is the ease of buying and selling of large amounts of currency by banks. I'm not talking about our little monkey money or little standard lot or 5 lots or 10 lots. All of that is monkey money. Liquidity is the ease of a bank to have 100 lots of monkey money. We are talking about billions of dollars being transferred. Billions of orders simultaneously going through lightning speed real quick. That's what liquidity is. Now, one of the main factors that affect liquidity is our orders as retail traders. Remember earlier when I was talking about order book, I told you the banks can physically see where our orders are. Those are liquidity spots, the ease of transfer of money. So let me show you some liquidity spots. You can always see them on the daily. Look at the extremes within the markets to find liquidity spots. So let's start over here. So we have liquidity right here. So we have liquidity right here. So we have liquidity down here. So and we have liquidity down here. So we have liquidity up here. So right here. So right here. So you see all these lines I just put on the chart. Those are the only places I trade. If the price is not touching one of those lines, or I never just touch one of those lines, I'm not trading it. I don't care. It could have been the best trade setup in the universe. I'm not going to trade it because it's not within a liquidity spot within the market. Right? Let me show you another liquidity factor. Trend lines. Everybody know what a trend line is, right? Must have your confirmations, man. Yeah. Is that what they mean by trading off the wicks? Alright. Wicks are candles on the low time frame. Always remember that. Can you give us permission to record? Personally, don't need permission to record because I'm recording all of it for you. You see this little thing right here? It's recording. I'm going to upload this to YouTube after. You see me? But if you want to record it for yourself, yeah, sure you can. You see me? So all of these zones are liquidity zones within the market. These are the areas that I look to take trades from. I like to trade in an area where there's nothing above my price. If I'm taking a sell, there's nothing close to, there's no support close to my level of, sorry, let me get this right. If I'm trying to sell right here, so there's no other resistance close to it. There's no other area in the market where price can go up to and hit a stop loss then fall, right? I like to trade the extremes of the market. Extremes of the market fall under daily highs and daily lows. H4 high and H4 low. So just look at your chart and find the extremes. Extreme right here, so see an extreme right here, so extreme right here. So all of this was a nice liquidity area. But look what happened right here, so it's within the liquidity area right here, so but look what happened. Price just fall right through it, right to another liquidity spot. People that were taking longs along right here, so they had their stops below right here, so and the market just come tap it and go them direction, right? So I like to trade in the areas where money is easily moved by banks, where banks can offload major orders and just go about them business. Those are the liquidity spots within the market. You see me? Now, how does a bank use liquidity against us, right? So what them do is them paint not fully understanding. All right. TERO. Unmute. Terran Linton, I just unmute you. What exactly do you understand?
All right, you're saying that you try to trade where they're
no support or resistance close to it. That's what you mean?
Yeah, all right, you can draw over the trend lines and let me see it again, because
all right, let me give you a perfect example. Right here.
Yeah, please.
See that?
Mm-hmm.
Now look at this. You see how far this level is? This level is way over from, what is this? 2017. Right? You see below this level? Below this level, the closest level of support is right here, so which is this level of resistance, and it don't have to act as support. That's more than 108 pips away. The closest confirmed level of support is 265 pips away. Right? The banks cannot manipulate a stop loss like that. Following? Them can't manipulate that order. It's physically impossible for them to manipulate that order without losing money, and no bank is in the business of losing money. Follow?
Yes, we follow.
Alright, so I like to place my trades in areas that it's hard for the bank to stop me out. And I'm not going to put a 260 odd pip stop loss, but having your stops a little below this zone. Alright, all of this right here is a demand zone. Let me explain like a little theory for you. Not really a theory, just simple buying and selling. If I have an iPhone 10 or an iPhone XS Max, right? And I'm selling it for $30,000. Alright, let's use US dollars. I'm selling it for $300 US. Right here, so. Unwilling to buy it? No. Yes or no? Would you buy an iPhone 10 for $300? I said yes, them come in. Anybody with sell phone in here for $300, a couple customer there. See me? You're willing to buy it cheap, right? That's what you call demand. So this demand zone is the cheapest price has been for euro since 2017, right? So this is consider cash as an asset. Cash is an asset for banks. So if them getting an asset very cheap, they are going to buy it. That's attractive for them because a bank is in the business of making profit. They're in the business of making money, and no better investment comes than a low risk, high reward, and cheap buy. This is basically like a bank buying a house that is valued $40 million at $5 million. They're buying cash cheap. You want to look for the areas in the market that the banks can make the most amount of profit on their money. Now, look right here, so. Again, unmuted. Look right here, so. You see this level right here, so? If you notice, it had one sell, two sell. When market come back to this level, what would you all do? Like, be honest, what would I do? We're not going to sell from that area. Now, if we're not going to sell from this area, right? Let's go to the H4 and see what we see, and look what we see. If we're not going to sell from this area up right here, so we're not again putting a stop loss. How do you make trades when you transition between the time frames? How do you make trades when you transition between the time frames? All time frames say paints a different story, right? And your responsibility as a trader is to try and find the story that all the time frames them line up to tell, right? So if the high time frame is saying sell and your low time frame is saying buy, you need to try find out why you're trying to buy on the low time frame and sell on the high time frame. That's how you identify liquidity traps. That's another way. You have to just sniff through the time frames to see if both of them are saying the same thing, both of them painting the same picture, right? So sell, the banks will buy. All right, so if everybody is looking to sell right here, so everybody wants to sell right here, so remember what we have right here, so right here, so is a liquidity zone, right? So the banks bought right here, so right? We can agree that the banks buy right here, so we see the market coming down very slowly, and then we see a big push down here, and then we see it fly out of this region. Like all of this happened in 4 hours. This 4-hour candle measures 73 pips. 73 pips on euro is a lot of movement. So we can agree that the banks buy right here, so right? Yeah, cheap price, so a lot of buyers. Yeah. See me? The banks bought right here. So remember earlier when I talked about the principles of buyers and sellers? So here's another principle for you to take. If you're in a buy, if you buy, you're closing that buy with a sell. And if you're selling, you're closing that sell with a buy. Right? Copy? You consider the average true range of your pair in your analysis? Yeah. Reason being because of RSI. I like to use RSI when I'm trading. It's like a elastic band. The price can't get stretched out. You see me? Exits are your entries. Perfect. Right? So the banks bought along this area. A lot of banks bought along this area. Now, if you buy an iPhone for $300 right here, so let me put back my $300 iPhone. Right? So we have a $300 iPhone XS Max right here. So we'll just buy it, right? So how do we profit from buying this iPhone at $300? Let's put up here as $1,000 iPhone XS Max, right? So we can put it up here, so right? So you bought it cheap, right? Sell it for $950, right? Because we want to make profit on my money. There's no sense in making an investment if you're not going to make profit on the money, right? So the man them need for get price up here so them can sell and make profit on them $300 iPhone. Make little sense? Must that make sense yet or a beer nonsense me attack? Oh, I'm not getting no replies in the comments. It's freeze. Say again, facts, sense, bro. Whole heap of sense. Alright. So the man them buy some cheap money down here. So in order for them to get up here, so them have to keep people wanting to buy. Them have to keep the buyer presence. Them have to induce something in the market for people continue buying, right? Now look here, so look at this. What we have right here, so we have a trend line, don't we? Have a point A, a point B, and a point C of a trend line, and then price broke the trend line. Trend lines operate on the principle that on the top side of it is support and on the bottom side of it is resistance. So all of this is acting as support and all of this side is acting as resistance. So some people are going to want to do this. Right? But no, the banks them need to make profit on them $300 iPhone XS Max. Right? So what going to happen right here? So some people are going to want to do this though. I'm going to want to take the market from right here so and sell come down here so and them going to have a nice 30 pip stop loss somewhere along right here so. Right? What do you think are going to happen here so? You know, think the bank them just going to push price beyond this trend line all the way up here to where you have a level of liquidity, a level of easy movement of money where them can switch the direction of the market and it go short. And I don't feel that make more sense from an investor standpoint. You don't feel that makes sense? That's how you have to approach it. You have to think like them. You have to try find the areas within the market that has least risk associated with that investment. Remember earlier when I was talking about lot sizes and I showed you that a 0.10 equals 10,000 US dollars? Remember that? Feel like me I talk to myself. Yeah man, remember that from earlier. That is how the banks them trade. Them have them 10,000 US dollars. It is smarter to put your 10,000 US dollars in this area than put it right here so. Because if you put your 10,000 US dollars right here so, look what can happen. It can go all the way up to 53 pips negative before you can see some form of push to the downside. It is smarter to put it in this area where you have less risk than and more reward to the downside than put it right here so and lose your money. You see me? That's how you have to pre it. Look at the market from an investing standpoint. So always try to think like the big banks. Think like the big banks. Always look for the liquidity spots them within the market. See a liquidity spot right here, so look what happened. Price came to it and did a triple top and fell. It had a trend line. Look at that. Let me show you what is happening right here. In order for the banks to sell right here, so them need this trend line right here to have retail traders buy. Because they want to sell. They need us to buy their sell orders. Would be looking for a pullback because banks know persons will be looking for a reversal. So TP and wait for trend continuation. Yeah, that's a smarter way to approach it. But let me show you a little trend on euro that has been Trump been doing that lately. That's how you ride the market. A little trend on euro. Euro literally does this every week. It builds up some form of trend line and then just break it and push down. Build up some form of trend line, break it and push down. That's all euro has been doing for a couple weeks. Well, week 1 we had a trend line, week 2 we had a momentum trend line, and week 3 we had another trend line, week 4 we have another trend line. The same situation. But from an investor standpoint, it's less risky to take a trade right here. So everybody know what the DXY is? Yes or no in the comments, please. Alright, I've seen a lot of no and a lot of yeses. Alright, DXY is the dollar index. Alright, what exactly is the dollar index? The dollar index is a weighted mean. Right? It's a pair just by itself. Basically, the dollar index stands for US dollar. Measures the strength of the dollar. It's not paired with anything. Right? So when the dollar goes up, everything that is paired to the dollar on the right side, if the dollar is on the right side, it would go down. Let me put this on the side so you can see. Alright, I'm gonna clear this chart. Alright, 4 hour, 4 hour. Tell me if you don't notice it. I'm gonna zoom in. Tell me if you don't notice it. When the dollar goes down, oh shoot. When the dollar goes down, look what happened to euro. Euro goes up. The dollar had a level of support. Euro had a level of resistance. You see that? You see somebody just said, whoa. So, just by using this United States dollar index, we can have we can have like I don't want to say the word. It's like a confirmation factor within trading. Wait, hold on. Can you go over what's the COT/CFTC weekly reports and how to read that? Big O, what is that? I don't know what you're talking about. This COT/CFTC. What is that? Cause I don't know what that is, you know. That's the first I ever hearing about that. And let me tell you something about me. Like, I am always willing to learn something new. You see me? So, I go unmute you and you go tell me what that is. Cause I'm interested. Something new I go learn. COT. No, hold on. Big O. Big O. You hear me? I'm just unmute you.
So essentially a report that they release every Friday about 2 p.m. with the commitment of traders. And it usually shows something like the big institutional traders, what positions they have open, how much they have added to that position and that sort of thing, and how much they have removed. They say it helps to look at if a trend is healthy, if it's progressing, if it's slowing down, if the bigger guys are pushing more to sell or pushing more to buy. but I just learned about it recently and not too clear on it.
Yo, suppose I tell you, you've just answered a question that I've been asking a lot of people and searching down the internet for a very long time. Like, this is something that I myself I've been searching for a very long time for this.
We need somebody to go with it, man. We need to learn how to read it. I was looking at the report from Friday, and quite a bit happening in terms of gold, euro, and even Swiss francs, which pop up on my radar for next week trades.
All right, let me tell you something funny about that. Gold, euro, and Swiss franc. Take out on the books, cause say another little bit of sauce right here, son. Whenever the world is in economic turmoil, or financial uncertainty, there are 3 safe havens: gold, CHF, and the silver, right? Whenever like investors don't know what to do with cash, then buy gold or them run to the Swiss franc. Like, look at the Swiss franc over the last 5 weeks. USD CHF. Over the last 5 weeks, all Swiss franc has been doing, not even over the last 5 weeks, over the last 5 months, all Swiss franc has been doing is just pushing up. Just been pushing up. When you see it pushing up, Swiss franc is a safe haven. Gold is also a safe haven. Right?
My other question was, as it relates to euro and DYX, which one is leading and which one is following?
No, it's not a leading and following information. They move exactly at the same time.
Because I know the DYX is 6% euro weight.
Hold on, give me a second. Everybody can see that? Yo, wanna copy that? Take a screenshot, take a picture of it, whatever you want. Uploaded this was in one of my backtest Fridays video. I think it was 2 episodes back, I think. But it's the DXY. It shows what happens to a other currency pair when the DXY goes up and when the DXY goes down. Safe haven. Somebody asks what. I'm not finish, big O. I'm gonna get back to you, but I'm just answering these questions. Safe haven. Safe haven means like it's a commodity that is not directly affected by news, right? So news is fundamental releases within the market. They have effect on currency. So like when the Federal Reserve Powell talks, like you'll see some random spikes within the market, or like for instance NFP, non-farm payroll, interest rate decisions. If we look on NZD USD, we can see a recent interest rate decision where they lowered their rates. I think it was this right here. Like, as an investor, you do not want to be holding currency that is fluctuating this rapidly, because your money at 7:01 p.m. will not be the same money at 7:03 p.m. It will have less value, right? So what you going to do as an investor, if you have Jamaican dollars and you know say Jamaican dollar go down, you're going to look for transfer it into either an asset or transfer it to an asset, right? Assets are normally US dollar cash, gold, silver, and CHF, the Swiss franc. Because like Switzerland has a very stable economy that never has fundamental news. They hardly have fundamental news, as a matter of fact. Hardly. So those are safe havens where people can store their money that won't be affected by Trump and all his rhetoric and all of the foolishness we're going in the world. Especially this what you call the US-China trade war. That has a heavy impact on the fundamentals and the US dollar and DXY. Despite that happened on GBP USD when Theresa May resigned on Friday. Alright, let me tell you something about that. Them know say she they are gonna resign from a long time, which is why GBP has been falling out of the sky for the longest while. So despite that happened right here, so it's just retail traders reacting to it. The banks have been reacting to this information from here when it's a GBP starts selling off. Because no investor wants to have money in an uncertain currency. JPY was a safe haven as recently, but they changed their monetary policy, I think about a week or 2 weeks ago, and JPY is being heavily affected by the trade war, so not really a safe haven currency right now. But that's that same what is it name? The what name? The Commission of Traders charts and reports. Like, that's new to me, and I'll definitely be looking into that. As a matter of fact, just shoot me a DM on IG and we can probably do a little call and have a little conversation about it. You see me? Alright. GBP, JPY, my god, blue accounts on that. My guy named iPhone said he could explain. Where's iPhone? Let's find iPhone. IPHONE. There are so many iPhones here. There's about 3 or 4 iPhones here. Hold on, let me scroll up. I can show you to everyone. Alright, again to unmute all iPhones. Which one are you? Talk.
It's Chev.
Chev? Oh, Chev, what on? Alright.
Yeah. Alright, so I basically knew about it a long time ago, but to be honest, I don't know how to read it all. So, well, if you can pull it up on your screen.
Where I can find it? Right here, so?
Just type into Google Commitment of Traders Report. And then after you do that, it's under the U.S. Commodity Futures Trading Commission. That's the link, the website.
Where I'm gonna see it. I said Chev sound like a teen. Chev, me and you on the same age.
Yeah, I'm 21. I don't know. Yeah, old.
I'm old man, know yourself. Alright, so where I can find this?
Or just cftc.gov.
cftc.gov. Yeah, we may discover something new here today. Cause this is me learning. Alright, what am I do now?
You go on to the Chicago Mercantile Exchange. Scroll down. Like you just
CMC.
Wait, you don't have it. Hold on, that weird. Go back up.
Them I hide it from me because them know if I find it, I murder.
That looks so much different from my page. I mean, it has the same logo at the top.
Alright, here what I go do. I go boss it up on the screen.
Cool. I mean, I'm looking at, well, my other, I look on it on my phone, so I don't know if I can.
Oh. Alright, here's what I do.
Alright. Put me on the screen.
You know, you're there on your phone, it not gonna allow you to do that.
Well, we can just show you the laptop.
Somebody said check my IG, they sent it to me. Alright. Hold on. I have 45 DM. Alright.
Oh, you see under the market data and analysis part?
Market data and analysis. Yeah? Right here, so?
Yes, the commitment. Yeah. Click commitment or trader. That's it. Alright, now scroll down. And then you're going to see the reports. And you're going to scroll down to current legacy report.
Current legacy reports, yeah.
Yeah, the column, the one that says Chicago Mercantile Exchange.
CMC Exchange, Chicago Mercantile Exchange.
Yeah.
See it right here. So long format, short format, futures, and
well, baby pips usually say I view the long format.
Long formats.
Yeah.
Guys, we can discover something new today.
You see the keyword, you're going to type in find and then put, the find button on your laptop.
Nah, Max kind of weird that way. Hold on, let me look at something for a second. Long short spreading, total long short. Alright. Butter. May I do with butter? Non-fat dairy milk. I'm find some real commodities. Alright. See it right here. So Euro FX Japanese yen.
Yeah.
Euro FX. This right here is called the Euro index. This is actually a wealth of information right here. So this right here. So
Right.
looking for like something where me trade, like for instance Euro US dollar. Control F. Alright, Control
Wait.
F.
Wait. Sorry, bro. It's actually the short.
Short? Alright, hold on. We'll go over to the short. Long format, short format.
Okay.
Alright. So I'm gonna say press Control. Oh, oopsie, that never worked. Where the Safari gone? Alright, Control F. I have a Mac. Command F.
Yeah.
Okay.
JPY or whatever peer you want, the abbreviation of the peer. And it usually
Euro JPY. Alright, we can use Euro JPY. Let's see if we can decode what this is actually saying to us. Alright, so it's saying non-commercial. I would assume that just by looking at these numbers, non-commercial means retail traders, because you notice contracts of Euro. Alright, you remember earlier, guys, you remember earlier when I was telling you about positions and lot sizes? And remember that? Yeah or nay? Unmute me. Big O. Big O. Big O. Unmute. Talk. Big O, you hear me? Alright, I think I don't know what's going on. So alright, so earlier when I was talking about the position sizes and lot sizes, that is one way to trade. There's a other way to trade called contract. CDF. CFD. It's, I don't remember which one it is, but it's a contract of difference, right? So basically it is a contract where you're going to execute, and at a specific time when that contract expire, you're going to get, is either if it is above your difference price, you're going to get money, and if it's below your price, you're going to be negative. Non-commercials are big institutions. Alright. Non-commercials are commercials are headphones. Oh, okay, thank you. Well, I learned something new today. Alright, so non-commercials, contracts of Euro, open interest, long, short, spreaders, long, short. So basically this is telling us that a majority of the big money reports are US traders. So it's saying something of the sort that Euro JPY should be going up, which Euro JPY is going down. Let's go upon the daily. Alright, yeah, we'll have to go look back into this at some other time. We can probably just link up and do a little webinar and look at this, because like a lot of the people that are here now go really so advanced and diverse for look on them something there, because even me myself, me not so advanced and diverse, because the first me I hear about this. But thank you for showing me this. I definitely can dive into this topic. So Anna can remind me when we did there before we did kind of deviate to that, please. What we did there? We're talking about the DXY. Alright, yeah. So Anna did copy of the safe havens and DXY. So gold, CHF, silver are being safe. Alright, so look right here. So on gold the other day, when I think it was at market open, when I'm gonna show you a trade that I got this trap. I fell victim to this trap. So everybody can agree that we have a trend line right here, so right, and we have a past level of support acting as a future level of resistance over along right here, so right. So at the opening of the market, you see this level right here, so a lot of people are looking to sell right here, so everybody was looking to like sell gold because yo, it's at a level of resistance and it's a trend line, so everybody are gonna sell. Yo, I don't remember what lot size I drop on this, but my personally did over leverage because this sell was classic. You see me? Anybody here did take that trade here and lose too? Or am I alone? Anybody else took this gold trade? Negative 50 pips. Bro, that's too much to lose. I probably went negative 28 or something on this. But this was a major trade that people lost. But let me tell you the fundamental side of what happened right here. So if you check the date was the 13th of May, right? 13th of May. So on the, let's go to Google. So we're going to type in trade war news May 13th 2019, and before I press search, like, let me tell you what happened. So basically at the open of the market, China said that they're going to place some sanction, they're going to place tariffs on some US dollar goods, which is not good for the US dollar, right? The trade war, this was some trade war news. Thank you. So boom. So it's May 13th. Right? I don't know why this is moving so slow. Come on, Digicel, come on with a little better internet. Alright, let me see if I can find on. Oh. Wow. See that, guys? Talk about patience. You see me? So basically what happened is that China said, where is it? I just saw it a while ago. It's right below this ad. See it here? So the Office of the United States Treasury Representative released a list on Monday of roughly $300 billion worth of goods that could face up to 25% tariffs. Now, a trade war, any dispute is always bad for money. So investor, Jano. So one second. My mouse not working. Connection lost. I'm just using my trackpad. Alright. So investors, when them see this is bad for the US dollar. That means that the US dollar is going to fall. And if you are holding US dollars, where do you put your money? You can't put it in euro, because let me tell you something, guys. Euro has been the worst investment of the decade. Like literally over the past 10 years, euro has been the worst investment. From 2009 to current date, euro has fallen over 30%. You see me? And imagine you have $10,000 in the bank 10 years ago and come back and it's worth 30% less than it actually is today. That lame, that lily, that not productive for your money. So if you have US dollars, you can't keep it in US dollars because you have a trade war. You don't know where to put it. The only asset you can put your money in at that specific time is gold, which is why gold exploded into the sky on that day, because investors were uncertain of the financial climate and wanted to put their money somewhere safe. Now, it comes back to supply and demand. If you have an excess demand for something, price is going to go up for it. It's just simple. If everybody want it and me have it, me I go sell it at a higher price so I can make more money. Right? On a copy? On follow? Alright. Alright, so we basically have 1 hour left on the web. Well, 40 minutes, 50 minutes left on the webinar, so we need to continue. So we did basic technicals. We talk about how banks trade, where banks, what do you use to keep up to date with news. Alright guys, 2 sites, forexfactory.com and investing.com. 2 sites I use for news. And also, let me show you a trick. Yeah, I definitely going to go over all of the questions I wrote down. I'm going to do those for you guys. But I have 2 other things to talk about. I have to talk about risk management, because a lot of us fail to really make money in Forex because we have horrible risk management. But look at this. You see on forexfactory.com, and ever I trade and like some random thing happen and I don't know what happened and I check the news and I can't find no news about it. And that ever happened to any of you? No? Let me see some answers in the comments. Alright, you see me? One way to find is you go to forex.com, forexfactory.com, and you click on news. You don't click on calendar, you just click on news. So these news, and another thing, before the market open, always come to right here so and look what's at this tab. So you see right here is where random news come out. So random news is like a one man just say something. Like a one Fed Powell or some head of some central bank or Theresa May say something, or some big scandal come out. You'll always see it under this tab. So what you can do is you go to it and you press stream. Because if you don't have stream, you have to constantly refresh it. But if you have stream, you can go to it, and anytime news come out, it will just always come right here. So right, so use investing.com and Forex Factory, 2 good places for news. My FX book is also a good one, but the My FX book app on your phone, it always carry the news delayed, which is lame. So we talk about liquidity, we talk about how banks trade, direction, explain what and how the DXY work, market trends, uptrend, downtrend, basic market patterns, low risk. Alright, yeah, we talk about smart money versus dumb money. Smart money loves low risk and high reward. We say we'll buy at support in uptrends and we'll sell at resistance in downtrends. Yeah, that's pretty much it. So now it's just open questions. Anything you want to know, just ask. Like, again to do, wait, pause. Before I do that, I had written down 3 things. 3 something there. Where them 3 sitting there? Market gaps. Alright, gaps. Anybody know what a gap is? Let me see some hands feedback in the comments. Alright. So basically, we as retail traders, we don't have access to the Forex market on the weekend, right? We don't have access to that at all. So when markets closed for us as the retail traders, it is still open for the banks. The banks can continue trading as much as they want, you see me? So what happens over the weekends is that if the bank is selling over the weekend, when the market open back, it is going to leave an empty space dictating that, oh, Bank X sold $10 billion, 10 billion pounds over the weekend, which caused the price to move to the low side. Now, is it true that gaps have to be filled? No, gaps do not have to be filled. Like, you can scroll back way in time and probably find some gaps somewhere that's still not filled yet. Let me see if I can get lucky enough to find one real quick. Normally they happen when the market is heavily trending to the upside. Alright, look at this gap right here. So, wanna see this gap? Look at this. This was a gap right here. So, market gap right there. This gap is, it measures, come out and you know. This gap measures 50 pips. And this gap took 4 days to fill. You don't want to sit down in a trade for 4 days negative and wait for a gap fill? That's not really the best thing to do. When the banks sell over weekend, who buys? Other banks. It's trading. The banks are selling from one bank to another. But let's say one bank is selling $30 billion. Then probably sell $1 billion to 30 different banks. And that's how the price gap. Right? Would that happen on gold? In terms, what you're asking, would gold gap? I don't normally see. Oh yeah, gold. Every currency pair can gap, but gold don't tend to gap a lot. It don't tend to have like very wide gaps. Okay, another thing. You guys know that you have 4 different servers on TradingView, right? Anybody know that? Anybody know the difference between Owanda and FXCM? And I can see this. All right, let's use. You see all these different servers? All right, so you have 4 main servers. You have FXCM, Owanda, Forex.com, and ICE, right? ICE is basically an inverted pair. They always have the currencies them inverted. So instead of euro, US dollar, you'd probably say US dollar, euro. You see me? Yeah, so that's one difference. The candlesticks them different. So let me show you the main difference between FXCM and Owanda. And GBP, JPY is a nice pair to use. So let's put it at a split screen. We're going to have FXCM on the left and we're going to have Owanda on the right. So look right here. So let's clear both of the charts so I don't get confused or lost as it relates to anything. Alright, so we're both on the 4 hour, right? See a gap here will never fill either. I'll know this not filling on. This gap was a heavy gap. Wanna see what I go on? Anybody see the difference? Hold on. Write in the comment what the difference be. So FXCM shows gaps and Owanda does not show gaps. The reason why I don't use Owanda is because it fills the gaps for you, which means that it is not accurate information. The accurate information is the gap. I need to know what the banks are doing over the weekend, because think about it. If the banks if the banks are selling on Saturday and Sunday, what do you think them going to Monday? Just think about it. What do you think the bank them are going to Monday? They're going to continue doing what? Exactly. Now, let me show you another trick, right? How many people in here has heard the saying gaps have to fill? Just say I. Type I in the comments. There are 59 people in here, so I'm have to see whole heap of eyes. You see me? Everybody knows a gap for fill. You see me? So if the market gap to the downside, right? Remember earlier I started this webinar saying one thing. In order for you to sell, you need buyers, and in order for you to buy, you need sellers, right? That's a one fact. A other fact, a lot of you believe gaps have to fill. So when the market gap and you trying to buy, if the market gap to the downside and you're trying to buy, what are you doing for the banks? You are buying their sell orders. Make sense? Alright. So when you buy them sell orders, when them dump off them order there and there's nobody else to buy the sell orders and the sell orders them just continue flooding in, which direction the market go? Just continue pushing to the downside. So that's the fundamental difference between FXCM and Oanda. Somebody asked earlier which one I use. I always use FXCM. FXCM is my go-to chart. I don't use any other server than FXCM. Always using the FXCM. See me? Man. Alright. So somebody said they wanted to see my fib layout. Is that person still here? Even though I don't use Fibonacci, I strongly suggest that you don't use Fibonacci. But if anybody wants to see it, this is my fib layout. I got this fib layout when I was in Wall Street Academy. It's the standard fib layout that a majority of the traders use. Market go down. What do you think, GBG, JPY? I think a buy trend is about to happen. Yes, but you said you use it against the markets. Lord, you were in Wasato. Yeah, yo, I was from Wall Street Academy. That's where I learned not to trade. You see me? That's where I learned how not to trade. I did. Who you get profit from more, Durant or Q? Alright, yo, listen to me. Listen to me. I'm not biased. I'm a very objective person. But I believe that quality is and what you should say. I don't want to use the word praise. Our credit is due where credit is deserved. Duran Carter is literally the best trader I know. So you see all them top trader there on Instagram, like Sean Lee and Aman Nat and all them top trader they out of there. Listen to me. That's just a face. See, them can trade, but when you talk about real knowledge, me I talk about Duran Carter. Like if anybody want a link to him, like I didn't tag him. I just do a post in my Instagram story. Carter FX. I just tagged him. So if you want to check out him content, check out anything he's doing. Alright. Yo, them man they weak. You see me? Any trader will use Fibonacci weak to me. Straight. If you use fibs and moving averages, you're weak. That's just my perspective. But I just put Duran Carter in our story, so you can check him out. Trust me, best trader. And by the way, he's Jamaican. Yeah, I know Pajama Billionaire. Chavez, I'm a boy, man. And Chavez, I know Chavez for like a good 5 years or so. You see me, Chavez, I'm a boy. Carter use liquidity. Yo, a lot of the things that you hear me talk about is the same things that Carter is doing within his course. Like, I've had conversations with him and him say, yo, bro, like, the things that me and him think about is like, we'll never speak about it. But like, when we have a conversation, I was like, yo, you know, that's what I've been thinking about of lately. But trust me, Carter is definitely the best trader I know, hands down. Hands down. All right, let me see what the comments them I say. Oh, everybody has a Carter too, naturally. Jamaican traders. As I say, Q is Jamaican and Carter is Jamaican, yo. So I don't really like the beef where them have. But you see me. Which courses I take? I took a lot of courses. Let me show you the courses then that I did. So I did something called MTI Trading Institute. Whenever I watch a YouTube video and then I hear something about the London daybreak trading strategy, whenever I see that ad there on YouTube, that the very annoying ad. So I did this education ultimate package. You don't watch the price here, you know, cause if I want if you know about Jamaicans, if it there online, we can bootleg it. You see me? What the price for this there? Get started. Wait there. Start learning today. Yo, I can't find it. Them used to have the price on it, but basically the price what them have on this website is like 6,000 odd US dollar. You see me? But I didn't pay that. I got this for free. This is the first information that that I was exposed to as it relates to trading. And then came Wall Street Academy. You see me? Yes, how we did land next. You basically pay for a mouse and pen and knowledge. You see me? We went over to Wall Street Academy. Like I did Wall Street Academy online and in-person course with Q. You see me? So like the knowledge I did get, I can speak freely to say it's not what I expected to get. You see me? It's basically a online version of, it's an in-person version of what's online. And then after that, I was like saying, yo, I cannot be out here trading. I've been doing the best of courses and I still cannot make no money. That no make no sense. Imagine you invest so much and you not make nothing. You just feel like a clown. You feel like, say, yo, trading enough for you. You see me? But if there's a will, there's a way. And if people make money out of trading, I can do it too. You see me? If somebody else do it, me can do it too. So as basically just teaching myself, as reverse engineering, I used to follow Roy NL. Roy NL is a good trader, but like to the knowledge where me have you now, I'm gonna really meds people like that no more. Roy NL, a brother named Brent I7, who else? Duran Carter. Who else? There's this other guy. I can't remember his name. Superior 4X. Zine? Those are the trade. Those, yeah, Brent I7. See him name there, somebody just community. BD is also a good trader. You see me? So I used to record them stories. I used to always look at what them are talk about, what them are look at. I used to reverse. You see those you see those entry picks that them post? Yo, a lot of people sleep on entry picks. But you see, when I post an entry pick, I'm not trying to say, yo, me a bad piece of trader. I'm doing the same thing that I needed to do to get where I was. I am providing people with a script for you to reverse engineer and try to find out why I took that trade. You see me? So that's what I used to do with all those top traders. I used to screenshot all of them entries and I used to go on the charts and I used to break it down and try to find why them take that trade. You see me? So after that, I joined Carter FX and I got like, yo, I'm telling you, Carter are the man when it comes to trading. Believe me. You see me? Believe me. And then, yo, if you don't want to learn how to trade, just do Carter FX course. Hands down. And don't need nothing else. Like, oh, whole heap of advertising for Carter that. Must can send me a money later. Lol. Anyways. Whew. Alright, so where were they? Alright, you saw the fibs layout, liquidity trap. I'm gonna show you a simple liquidity trap. This is basically a liquidity trap right here, you know. The market gap to the downside, people believe that the market again go back up to fill the gap and it just continue in the other direction. That's a simple liquidity. That's a simple example of a liquidity trap. What else? Trade breakdown. I want the trade breakdown to be the last thing I'm going to do. So I'm going to start the trade breakdown at 3:40. So I have 10 minutes for me. Ask me any question and over. 10 minutes. Shoot the question, then I'm going to take them first come, first serve. So far, I'm going to use the bathroom real quick. Hold heap of water over here, drink. So when I forward back, I just get start answer the question then. right. Boom. All right. What were they? Wow, that's a lot of questions. Now, gonna buy his course laugh. I'm scroll all the way up. See if I miss anything. Alright, so I had the eyes market go down. What do you think of GBP JPY? You think a buy trend is about to happen? Like, and I remember earlier when I spoke about I'm gonna show you what I look for in order to take a buy. Not personally what I look for, but a major buy indicator. The market is in a downtrend. In order for me to buy, I have to see this happen. It has to take out a high. It has to take out a high for the structure to transition to be an uptrend. Right? That's the only buy indicator I use. So whether it happened on the M15, the M5, the H1, or the H4, that's the only reason I would go into a buy. Can you give an example of your low to no drawdown entries? Yeah, I'll definitely do that when I'm going over the trade entries. Some trade entries I did this week. Naturally lol, facts not to trade, lol, Q too much, DC, naturally facts, blah, blah, blah. What about Roy? Yeah, Roy's a good trader. Man, them say bun fibs. Carter use liquidity. Carter uses everything to trade, yo. Everything that makes sense in trading, Carter used to trade. I sell mine for $2.99. I'm not encouraging nobody for a resale, nobody intellectual property. Like, I believe in credit due where credit deserve. As I say, my burn out the resale of intellectual property, something there. You did that course when the first came to Jamaica. I did Wall Street Academy 5-day course about a year ago in person. You basically I pay for a mouse. Whoa, same fees like a bread back right now. That may I said so. What do you use for price alerts? 2 apps. I have TradingView Premium, so I can just you see this little it's not there now, but you can left click on the market and basically click add alerts. So that's one thing I do. If you do buy TradingView Pro, you can use an app called Call Levels. No, I don't know. Queen Roy is great swing trader. I need to withdraw soon. I join the saucy Brent I7 BD. Yeah, Mighty is a good trader too. BD legit sniper, Forex sniper. What do you think about USG buy trend after now for 350 pips after that big drop? Yeah, listen to me. GBP JPY can continue falling. Lama, when did he? How to enter the market on H4 is too condensed. Yeah, you have to scroll down. If I'm rich, I wish I was rich. I want to buy a Bentley. Did you expound about money/risk management? Alright, for starters, risk management is like everybody have them own risk management strategy. Like there's no nobody can tell you how to safely manage your money. It's your money. If you want to risk it real quick and lose it all, then that's your business. But the general rule of thumb is that you shouldn't be entering a trade unless you're getting at least 3. Your reward is at least 3 and your risk is 1. You see me? What's the price of your course? I charge 4 bills for teach, but I'm not teaching right now. I kind of focusing on myself and doing more. You see me? And plus I literally have 10 students, and before I think of taking on more students, I have to make sure them 10 students they're exactly where I want them to be. You see me? How do you set take profits and stop loss? That is going to be answered when I talk about how I enter trades and all of that. Entry techniques, as I said, that would be answered when I show you how I break down. What are your rules for trading? My rules them, if I tell you my rules them, what day I talk till tomorrow morning. You see me, I have so much rules. How do you use time frames to enter? Alright, time frames to enter. If I want to take an entry of let's say right here, so we have a known level of support right here, which was broken, which is the potential to be a level of resistance. So this can kind of answer the time frame correlation question to the person that asks if I use Skrill. No, I don't. I have a US account, so I just withdraw straight to there. So that's the easiest way to withdraw money in Jamaica. Yo, let me tell you a story. I withdrew some money to Scotiabank one time, and the man them closed my account. You see me? Because the check came from this really shady country. You see me? The address where your broker is registered to is not the address where your money is coming from. So you need to be very careful of that, because you have something in Jamaica called the Proceeds of Crime Act. Well, like as a trader, if you do some big withdrawals, you need to know about that, because you can land yourself in some serious trouble. So yeah, this is a known level of support right here, which have the potential to be a level of resistance over here. So I got this level of the daily, right? This is a trade I took this week also, so 2 birds, 1 stone. So we'll get this level off of the daily. We'll go down to the H4. We'll see that we have a level of support right here, so, and a known level of resistance right here, so. GBP JPY is in a downtrend, so I am only looking for sells. You see me? So off of the H4, we'll scroll down to the H1. We see an interaction with this area, but that's not enough. To get the sniper entries, you have to be going on low time frames. You have to be analyzing what is happening within the market on lower time frames. So let's put this as pre. So a lot of my entries come from the M5 and the M15 standpoint. I see 20 new messages below this. I still get to them there, so I'm just scrolling down. Alright. So look at right here. So we have a level of support right here. So the market came up, it touched this black line, which is our H4 level of resistance, and this blue line right here, our purple, is our daily level of support, which was broken, which has the potential to be resistance. So a lot of people don't use the line chart, but just look on the line chart what you see. We see a level of resistance, a level of support, a level of resistance, a broken level of support, and look at this little thing that happened right here. So look at this little notch right here. So like, yo guys, nothing in the market is random. Nothing in the market is random. You see this little notch? When you look on a candle, that's a wick. That's your sell. You enter your sell right there. You give yourself a conservative stop loss. You don't want to be out here risking too much money. Like when I enter certain sells in the market, I can comfortably just live easy, because I enter off a liquidity spots, and I know what a lot of other people are doing in the market. So me entering right here, so I'm basically entering with the banks, so I'm kind of comfortable. You see me? I'm not really fret, because if me I lose my money, then bank have to lose money too, and these banks ain't losing any money. So I'm actually still in this trade. I think I'm up about 150 something pips. Well, I didn't enter exactly right there, so I missed the entry, but I got in at this level right here. So we had a level of support right here, which was broken, and it started acting as a level of resistance along this area right here. So this is where I entered. The ideal entry was up here though, but this is where I entered. I put my stops above this level. You see me? I think I had a 34-35 pit stop loss, and I am still in the trade right now. So I am up floating 171 pips on that trade. You see me? So that's basically how I trade. And my take profit, I trade from levels of resistance to levels of support. So my next take profit of this area, I'm actually looking hopefully to get to the 138, 137 region, somewhere along this level. Alt H. So this is actually my take profit for my trade that I'm in right now, right along here. So 269 pips, a nice little swing trade. The market is going down, so why would I want to try and buy with the markets? How do you use time frames to enter? What do you think? You teach. Hold on. I have been using hot forex and same SL hunt caught me 3 times this week and went in the direction I wanted to go. Is Hugo's way a better broker? Alright, if you're getting stop hunted, maybe you are placing your trades in the wrong direction. When a broker stop hunts, they cannot be ridiculous about it and make it go up like 60, 70 pips. Normally it's going to be in a certain range. And if you look, you should look at the criteria of using certain brokers. Look at slippage and spread and stop hunts and all them things there. If you see something on your MT4 that's not on the regular charts, you can report it to your broker and maybe you get back your money. How do you determine if you should take profit or hold? My trades, I use low time frame trend I use low time frame trend to maintain the trade. So, give me a second. So if I see the market doing this, I'm pushing down, continue making lower highs, lower lows. Wow, my laptop is moving so slow right now. You see me? If I see this continue happening, I'm going to maintain my trades. I'm scrolling down. Any other trading books you can recommend? Yo, I'll post some PDFs on my story later. Let me write it down. Cause I have mine. I forget things really easy, so I have to write it down. Post books on story. Post books. Any book by Mark Douglas is good. Trading in the Zone and The Disciplined Trader. Those are 2 good books. You're not gonna start a team. I have a little team, you see me? But nothing too serious. Use trailing stops. No, I never do that. Repeat that again. I don't know what you're talking about because I'm so far away. Which US bank you have an account with? Wells Fargo. Do you have to be a citizen to have a bank account? No, you can go over there and just tell them you want a bank account. What is the best way we can get a US account being a Jamaican? One of my brethren them show me a little way for go around that. Use this site called Payoneer. It basically gives you a what name? It gives you a Bank of America account. Open a US account at the bank, bro. How do you avoid being flagged at Scotia with the POC Act? I register a business and just let them know exactly what I'm doing. Like if you're trading and you're making money, you have to be serious about it. Just register a business, go into the bank and tell them what you're doing. How do you know where the take profit is? As I say, I look for the next immediate level of support, and that is where my take profit is. I don't use Fibonacci expansions to take profit. You always enter on the M15 charts. Depending what type of zone I'm taking a trade off of, then I'll use that to determine what time frame. So if I'm like, for instance, this Euro trader right here, this zone right here, I know this is a very strong zone where a lot of orders are concentrated. So even if I go on the M3 and the M5 from I see a level of resistance broken on the M5 time frame, I'm in that trade. Like my students, I don't teach them how to do this because it's a lot of risk because you don't see a proper transition, but you have to risk it, forget the biscuit sometime, yeah. And as my students grow more as traders, they will identify areas as like this and choose to execute accordingly if they choose to. But the way how I teach the trade, it's very safe. You lose very limited, and you can know you're going to lose a trade before you lose a trade and come out, so you don't really get your stops hit. Because if you see a transition from sell to a buy and then you see a transition back into a sell and it starts going lower than your initial entry, that's my students know them for come out of the order there because the market has transitioned back into its initial direction. How long have you been trading? Basically 2.5 to 3 years. I've been losing money for 2 years, guys. Full facts, I lose money for about 2 years. Which broker I use Hugo's Way. Yo, you know anything about brokers labeling accounts as A losers, B winners accounts, and being slack with A accounts so they lose more? I don't know, but if you know about a broker that's doing that, you definitely shouldn't be using them. To the YouTube about laptop, I move like a typer. Move from there. No limit orders in liquidity zones. Like if you can identify liquidity zones within the market, you can place your orders there. Like that's an easy way to go about trading. Just place pending orders. Like for instance, you can put a buy limit in this zone. If you had a buy limit here, get tapped, you'd be up like 70 pips right now. Well, 82 pips. How you spell that Pioneer or so? Just Google it, you'll find it. Yes, please tell us how that spell. Hold on. See it here, so. Pioneer. How do I really analyze? I just look at support and resistance. That's all you need in the market. Support and resistance and the knowledge of knowing where banks place their orders. This was a level where banks place them orders. This is a level where banks place them orders. That is why I can do some things like this. That's why I can do things like this. So this is the same Euro trade. Like I mapped out the trade long before it happened, and my take profit just hit Friday because I've been waiting. I know that the banks them accumulate a lot of orders in this liquidity area. I know that when the market tap that liquidity area, it's just going to fall to the downside because the banks are selling at this level. Especially this trend line, the buy that I took right here, so like I can be a retail trader and be an institutional trader because I know that the banks need people to buy this point C bounce off the trend line, come all the way up here, so that they can accept those buy orders, close those buy orders with sell orders for them to be able to have this big push to the downside, which is exactly what happened. Closing one order with the other order. We sell right here, so we needed this trend line so that you can have this buy go up all the way here, so you can sell come down here, so you see me? It's like clockwork. And put them like side by side. Can I get them side by side? Zimmy is clockwork. This is what I call being proactive within the market. You have to foresee the moves them long before it happens. Do I have a Telegram? No, I don't have a Telegram. Like, I don't believe in Telegrams. I post everything on my Instagram. Everything that up on my Instagram. But let me just wrap this up real quick because my mouth tired. I've been talking for a minute. Burn off on that talk, by the way. My mouth tired. How do I close this? No, I don't have a Telegram. As I say, Instagram, everything there. Instagram, everything there. Alright, so look at this trade right here. The ideal way to enter this trade, all trades that I do follow the same route. It has to have an interaction with a zone. It has a transition within a zone, and then I execute based off our engulfing. So this is a zone right here. We'll go to a low time frame. Which time frame do you look? Alright, I'll still get to them in there. Hold on. Go back a little. Is me? Go back up to right here. So alright, so we have an interaction right here. So let's use this interaction for example. So we see the market interact with right here, so right? You see this composition of this candle, you see how bearish this candle is? Trust me, that is banks selling. No retail traders can do this. See? But we need to break it down. We need to go even further down to see what really happened in that region. Alright, right here, so we're on the M5, we're on the 5-minute chart. I tell you, all trades follow the same thing. Same procedure. We have a level of resistance, have a level of support, a level of resistance, and the level of support was broken. So when we see that on a low time frame, we see a level of support broken at a certain area within the market, we use time frame correlation. If we are at a level of resistance on the H4 and we see our low time frame being broken, you can enter the trade from there. So, and like I never my take profit for this particular trade was the level of support, but it didn't hit. It came all the way down here. So I manually closed this order at like about 80 pips. So I came out of this order somewhere around right here. So yeah, somewhere around right here. So I came out of this order, but I wasn't worried because I know that a lot of orders are sitting along this area. So I'm just go back in. I entered again off of the break of this level of support acting as resistance on the trend line right here. So to get this trade from right here, so put my stops above that previous lower high, and this is a head and shoulders also. Left shoulder, head, right shoulder, came down here, came up here, and then pushed to the downside. So I got the 90 plus pips off this trade. So a lot of you may be wondering if I just sit down and say, oh, I just can take a trade. Yes, I can take a trade. This, like, the process goes like this. I'm gonna get a random pair. Somebody tell me a random pair. Just comment a random pair. GA. Nah, GA ain't a random. UJ. I hardly trade UJ. I hate it. You see me? So I can use UJ as a random example. Alright, so USD JPY. I'm going to be proactive with the USD JPY. So I'm going to look for the two areas. Right, let's see what I have on this chart. Alright, for instance, this right here, this is a liquidity spot within the market. Right? People are looking to buy from right here, so. Right? Now, let me see if I'm really techie in what I've been preaching from about liquidity traps. Where looks like a better investment? Buying right here, so, or buying right here, so. Hold on. Where look like a less risk investment? Because if you buy at the first zone, you're going to have more orders down here, so. See me? So a lot of people would think, oh, a double bottom is going to be formed right here. So the market will literally just push through this level of support like a hot knife with a slice of butter and just come right here, so, and then reject right here, so, and go on about it business. Like, look at the space between these two levels. If you take a buy at the extreme low right here, so this is the next low down here, so is like 50 odd pips. If you take a buy right here, so you see me, your stops them are go hit. You see me? So this is a less risk buy. So these are the areas I look for. And if I'm looking for a sell, just by looking at the daily alone, I would feel more comfortable either selling up here or selling at the confirmation that this level of support is going to act as resistance to push price even further down. So I just look for the extremes within the market. It's not rocket science. And I remember earlier when I was talking about the misconception of traders by people on Instagram. Like, you don't have to always be trading. You're not fair trade every day out of the week. You can trade once or twice for the week. Like, you're participating in a market that has trillions of dollars flowing all about. You're not fair trade every day. Just trade whenever you feel like trade. Or trade whenever price interacts with certain areas like this. So getting, like, I'm gonna take off them little lines sitting here. Delete. These are the areas I focus on within the market. Them area. So like on the H4, as I said earlier, the best trades come from the daily and the H4. From the H4's perspective, I am looking at right here and yeah, right here and down here. So like those are the only areas I'm focusing on within the market, or probably from the H4's perspective, this also. But as I say, it's for me personally, it is more it's a better risk to reward by taking a trade down here so than up here so. And also, yo, the market can give you 1,000,001 different setups. You know for try catch all of them. You know for try catch all of them at all. Like just chill out. The market now run gone away. Trading now stop tomorrow. Let me see if I can find anything else. Alright. Yeah, you looking at the market. Yo, don't be this person. Don't be this person on the M5 watching every candle looking for a trade. That is a perfect recipe for lose your money. Easy lose money. Like, easiest way for give away your money this so. Just chill. Be like, what am I say? Just be proactive. Find areas in the market where it has the best risk to reward. So like all down here, so I'm not going to look to take a GBP JPY buy until the market is somewhere down here. So what do you think about Invest with Care? Invest with Care is like a good Jamaican group. Like I really rate them energy over there. Like them really trying to help one another and build. You see me? So big up. I think is Caleb and Abraham. You know, big up the whole of them. Anybody that's out here trying to teach Jamaicans more knowledge, I fucks with them. You see me? But, you see me? And everybody I go trade the way how I trade, but different strokes for different folks. I need to visit Jamaica. Yeah, man, forward a yard. Jamaica, the place, you see me? We have nice beach and good kush and them little thing there. Jamaica is a nice country. There's one last thing I'm supposed to do. Dream weekend soon. See me. Yo, no need to look on something named SPF weekend. Is a nice little weekend that also. But yeah, that's pretty much it. Well, my day I talk. Whew, I've been talking for 4 hours. Feel dehydrated, but yo, if wanna learn something from this webinar, just drop some love in the comments for me, cause like that's why I do this. I like to see the feedback and them little thing there. You see me? There's 54 people here. I have to say 54 thank you over here. So I'm just kidding, but yo, big ups guys. It was a good webinar. I hope everybody learned something. Did you learn something from this webinar? Yeah. Big ups. What do you use for price alerts? As I said, the app name call levels. See me? So that's pretty much it for this webinar. As I say, I hope everybody learned something. Just continue to follow me on Instagram. I'm not Carter, big up yourself, you see me? I'm not selfish with knowledge. I won't directly teach what I am teaching my students, but just follow me. Like, I give out a lot of free knowledge. When will you upload this webinar? This is 4 hours, so this is going to take a very long time to upload. But see this group right here, so Superior Forex on Telegram is one of the other traders I look up to. Like, check out this group. Just add him on Telegram. He's a heavy fundamental trader. But guys, that's pretty much it. Kimo Carter, Mighty, all of them. One link. You see me? But guys, that's pretty much it. You're going to see the post on Instagram that I was talking about a while ago. Let me give you the name. Channel info. Superior 4X. Another really good trader. You see me? Yeah man, Edgar bad like cancer. iPhone is not in this meeting. Hold on 1 second. Send to everybody. Superior Forex, another really good trader. You see me? But guys, big up yourself. I'm going to eat some food and take a nap now. Hope everybody enjoyed and learned something. Bless up. Bye bye.